All right, let's dive right into our breakdown of Moderna's Q4 2025 earnings. The call was on February 13th, 2026, and this was a really pivotal moment for the company. The results are giving us a much, much clearer picture of what their future looks like now that the pandemic is in the rearview mirror.
At the end of the day, the whole story for Moderna really just boils down to this one question. Can they actually pull off the pivot? Can they go from being the face of the pandemic to becoming a durable multi-product platform company? Well, their latest earnings give us some pretty compelling answers.
So, first things first, let's look at the headline numbers. The market's reaction was super positive, and for a good reason. It was a clear, convincing win. Moderna delivered a solid beat on both revenue and earnings. Okay, check this out. The company reported a loss of $2.11 per share. Now, that might sound bad, but the street was expecting a loss of almost $2.60. So that's nearly 50 cents better than expected, a huge beat. And on the revenue side, they brought in $678 million, nicely ahead of the $658 million everyone was looking for. Just a solid performance all around. And this is how the market voted. The stock jumped and closed up over 5% on the day. And get this, it was on roughly double its normal trading volume. That tells you this wasn't just a little blip. It was a decisive, positive reaction. Investors really, really liked what they heard. But look, the real story here isn't just about one good quarter. It's about management successfully changing the entire narrative. They're working so hard to prove that Moderna is not a one-trick pony, and this quarter, well, it gave them some powerful ammo for that argument. This really lays out the whole shift perfectly. On the left, you've got the old story, the one the bears love to tell, a shrinking COVID business, burning through cash, and totally dependent on the US market's seasonality. But on the right, that's the new story they're actually executing on, becoming a true platform company with aggressive cost controls and building a solid base of international contracts. And you know what? This isn't just talk. They are backing it up with action. Operating expenses were down a massive 31% year over year. Think about that. That's not just trimming around the edges. That was a huge driver of the earnings beat, and it's absolute proof that their cost discipline is for real. The other critical piece of this pivot is going global. They're locking in multi-year deals in places like Mexico and Taiwan, and even starting local manufacturing in the UK and Australia. So why does this matter? It's all about shifting away from the US roller coaster. The goal is super clear. Create revenue streams that are way more predictable and a lot less seasonal. Okay, so it all sounds pretty good, right? Well, it's not all smooth sailing. Despite the great quarter, there is a big, dark cloud hanging over the stock. And that cloud is coming directly from the U.S. Food and Drug Administration, the FDA. And you don't have to take my word for it. You can just hear the frustration in the CEO, Stefan Bonsel's voice from the call. This quote really frames the whole problem. He's basically saying that the unpredictable environment at the FDA is creating a massive headache for the business. So what's the issue? It's something called a refusal-to-file, or an RTF, for their standalone flu vaccine. Now, for anyone who's not familiar, an RTF isn't the FDA saying no to the drug itself. It's them saying, hey, this application isn't complete. The impact, though, it's a huge delay. It basically puts the brakes on the entire vaccine's progress in the US market for now. Now, in response to all this uncertainty, management did something really, really smart. They just went ahead and took any potential U.S. revenue from their flu products completely out of their 2026 forecast, just gone. This totally de-risks their guidance. It sets a super low bar, which, creates a real possibility for a nice upside surprise if they can ever get these FDA issues sorted out. So, let's put it all together. You've got strong execution and a smart strategic pivot on one side, but you've got this very real regulatory risk on the other. So, how should you be thinking about the stock from here? Well, that brings us to our rating. We are initiating coverage on Moderna with an outperform rating. And yes, we know, the regulatory noise is loud, but we believe the underlying operational strength is the real story here, and that's what's ultimately going to drive this stock higher. So our thinking rests on a few key pillars. First off, management has earned some serious credibility. They delivered on cost cuts, they beat expectations. Next, their 2026 guidance is now super conservative, which sets them up for potential beats down the road. And you can't forget about the cash. They have $8.1 billion. That is a massive runway to fund their pipeline, which has a ton of catalysts coming up in exciting areas like oncology. And finally, just look at the stock's reaction. It proves that right now the market cares more about the successful pivot than it does about the short-term flu headache. Okay, now for the fun part.
Given this big known question mark around the FDA, there's a specific way that more experienced investors can play the volatility that's almost sure to come. Let's walk through the trade idea.
We're calling this one the FDA Catalyst Strangle. The idea is simple. The news from the FDA on the flu vaccine is going to be a huge deal, and it's going to cause a big move in the stock. So the structure is to buy both an out-of-the-money call option and an out-of-the-money put option. Basically, you're betting on a big move, but you don't care which direction. If the FDA news is good, the stock could rocket higher. If the delays continue, it could sell off hard. You profit as long as the stock moves sharply up or down, more than what you paid for the options. It's a pure play on that coming volatility. And as always, please remember, this is not financial advice.